James Shugg, right on time, senior economist at Westpac, joins me in the studio now. So what do you make of that? They managed to reach their target amount. In fact, I think they exceeded it, 1.64 billion euros, but they paid a lot of money for it.
They did. Look, I don't think it's a real surprise that they did successfully, albeit expensively, get it away. I think that was the intention. I think that the government had in place buyers that it knew would step up to the plate. We certainly know from chatting over lunch, with our counterparties in Portuguese banks, that there's a lot of moral suasion on them from the government to actually buy the bonds, because they know that they can then flog them off to the ECB anyway. But at least it looks like a successful issue, and it's, I think, been intended to try to show that Portugal can still raise money in financial markets. But I actually regard it as one more stepping stone, one more domino falling towards an eventual rescheduling of debt by Greece, Ireland and Portugal. Greece has sort of been out of the news a bit lately, but Ireland and Portugal are really demonstrating some real problems, I think.
Why do you say that?
Well, it's not going to happen this year.
You're talking about restructuring?
That's right. But we still haven't yet seen exactly what post-2012 arrangements are going to be in place in terms of creditor participation in any further bailouts of these problematic governments. And these governments are going to be suffering from very low economic growth for an extended period of time. They're not going to achieve their aggressive budget cutting targets because of public resistance. We've got elections coming up which are going to show that the people in these countries just don't want these sorts of cuts. They're not going to be achieved. So ultimately the funds that have been set aside won't be sufficient. And beyond 2012, I think it's going to become increasingly clear that creditors are going to have to participate. That's another way of saying there's going to be some sort of rescheduling.
Won't they just expand the EFSF?
Well, that's the issue. Politically, the Germans, for example, are pretty adamant that they're not, beyond 2012, they're not prepared to let this current situation continue forever. That is, ultimately, creditors are going to have to wear some of the pain. Now, we don't want to talk about it. They don't want to talk about it too much at the moment because, of course, as soon as that becomes a known fact, it's going to make it even harder for these governments to actually raise the funds that they need. So for the time being, they're going to get by, and today was a demonstration of that. But it doesn't convince me, in the longer run, that there is actually a sustainable solution.
And probably won't convince a lot of other investors. I mean, just getting back to this Portuguese bond auction, where was the appetite coming from, do you think?
Well, as I say, I think that it was coming from Portuguese domestic banks, knowing that they can pretty quickly flog some of the stuff off to either the Portuguese Central Bank or more likely directly to the European Central Bank. There may have been participation by some external parties. I've just been down in Brazil. I mean, I certainly haven't been talking to the decision makers down there, but certainly the people I was talking to...
Don't hold back, James.
Well, we were certainly chatting about the issues.
There were mixed signals, weren't there?
Well,
Finance minister coming out saying, I'd be surprised if they would buy bonds.
The president was suggesting that maybe they would. I don't think a decision, there was certainly no intention, I don't think, to participate in today's issue, but I think there might be a Brazilian intention to participate in those that have been on the schedule for some time. That is, some of the future issues.
How close is Portugal to a bailout?
It's very close. I mean, look, the ratings agency, one of the ratings agencies now has got them, I think, just one notch above junk status. I think that's a signal that they're pretty close. I think the fact that we've got elections coming up, which will demonstrate that the Portuguese people, are really unhappy with the measures that are being imposed on them. I think that will be another sign that they're getting closer to a bailout. A bailout will probably happen this year. A bailout, of course, is not the same as a default or a restructure. That'll be the story probably for 2013.
We'll see a bailout, but it'll be a temporary solution.
That's right.
In a few years' time. We're looking
this
at
is
default.
This is not
it's not going away.
a story that's just going to last 10 weeks and months. This is an ongoing, year after year story. And of course, there's a generational change going on in terms of the living standards of people in Portugal, Ireland, Greece, and the big one, of course, is Spain. If Spain starts to get involved, then the funds that have been set aside simply aren't enough. If Spain gets involved, we're looking at a layman's type event. The key issue is to try and draw a line between Greece, Ireland, Portugal, and preventing Spain from getting into difficulties.
Very briefly, in about 15 seconds, is that likely? Are they going to be able to do that? Isolate Spain?
We have three scenarios. One is they just muddle through forever. Two, we get those smaller countries defaulting, restructuring. The third scenario is that Spain goes and then there's pandemonium. We're favouring the second scenario, that it's limited to those first three smaller countries that ultimately restructure.
If borrowing costs are anything to go by, Spain and Italy, a distinction should be made between those two countries' larger economies, and
that distinction is still being made, and that's a reason why we're reasonably confident that Spain isn't ultimately going to get drawn into this. But look, if there's problems in the Spanish banks that we don't yet know about, that the government has to then bail out, then that will be the first sign that Spain has also ultimately got real long-term problems.
How likely are further losses? That's something you're anticipating, given the
further losses are likely. It's the key is what is the extent of those further losses, and to what extent does the government need to bail them out, and what does that mean for the government's budget numbers, given that the economy in Spain is inefficient and is going to be running very slow growth numbers for many years to come. And throw in an ECB rate rise, for God's sake.
We haven't even got to that yet, have we? The ECB rate rise, the impact that's going to have on the fragile economies.
Well, I don't think it helps. I'm very disappointed that they're going to do it. I'm very surprised that they're going to do it. Look, core inflation in Europe is 1%.
Headline inflation is higher.
It's 2.6.
Yeah.
But look, what other central bank in the world really worries so much about? Look at Bank of England. Yeah, a couple of the guys there are worried about it.
Food prices are rising, gasoline, petrol.
Yes, I know, but that slows down the economy as much as it puts pressure on inflation. And remember, apart from Germany, the rest, which is very efficient in terms of low unit labour costs, Germany didn't have the party of the past decade where they were profligate like most of the rest of Europe did. Germany's doing kind of okay because of the export story, but Germany's not importing stuff from the rest of Europe. So Germany's is very happy, thanks mate, but the rest of Europe is really struggling, and that's another ongoing issue that's going to dampen the ability of these governments to sort out their budget problems. Throw in rate rises into that mix and it even makes it more problematic.
What are you expecting?
Well, we actually did our forecast quite a few weeks ago because I've been away for the last few weeks, and our initial estimate was for a 160,000 increase in payrolls. As it turns out, that number's right at the bottom end of the range of forecasts. Yeah. There's only like 5 of us around there of the 83 people in the Bloomberg survey. The consensus is closer to 200,000. I mean, a key issue is how much of February was a weather bounce. If you look at leisure-related jobs and temporary jobs and a few other sectors, construction's another important one, that had bounces in jobs, you can sort of come up with a bit of a feel that maybe around 60,000 of the increase in February was actually related to the weather. So make an allowance for that, and the 160,000 that we're talking about actually does represent an acceleration in the labour market, but just not as much of an acceleration as the market consensus is looking for today.
So why is the market consensus so bullish?
Well, I don't know.
Where is this positivity
everything that's
coming
come
from?
out since we did our forecast in the beginning of March has sort of pointed towards downside risks to our very, very low forecast. For example, ADP, you mentioned before, the typical outperformance of ADP over the last 4 months has been around 60,000 jobs. So take 60,000 off 201 and you get a private payrolls gain of 141,000. On top of that, government jobs have been losing about 25,000 a month over the last few months because of the state governments not being able to run budget deficits and cutting down on services and so on. ADP actually implies something like 120,000 or less increase in payrolls today. You look at the new home sales, look at housing starts, incredibly weak in February, and because the payroll survey for March is taken right at the beginning of the month this time, because the 12th was a Saturday, really what was happening in February will be a big driver of actually the March number. And construction jobs, I think, will be a big downward surprise. On the manufacturing side, the business surveys have been pretty mixed in terms of what they've been saying in terms of their jobs components. There shouldn't be a big surprise on the manufacturing side.
The overall rate of unemployment expect to stay the same?
Well, that's a very different story. You see, the issue there is when is participation, which has pulled down the unemployment rate in the last few months, when indeed
when
is
it
going to bounce back up? We think it's going to this month a little bit. We're looking for unemployment to rise back above 9%. If it doesn't do it this month, it's going to do it at some point later this year. And also, I've got to say, we think the US economy is going to lose some momentum later this year too. So even if we do get a bit of an acceleration in jobs growth today,
it won't be consistent throughout the year.
Well, that's right. We're looking for actually weaker job outcomes once we head towards the third and fourth quarters of this year.
So an overall rate of unemployment going
that will put further upward pressure on the unemployment rate, even if participation does rise. Throw into the mix the Japanese issue, what that means for automakers. You know, autos have been a big part of the US success story, an apparent success story in the last few quarters. There's going to be some real difficulties there. Ships are very slow. You know, there's still lots of inventory coming in, but at some point later this year, those ships are going to be empty. Well, the ships won't even be arriving. And so the US automakers aren't going to have key components, you know, like paint and so on. You know, there's some big problems ahead for the US economy.
You know, there's so much to talk about, isn't there, James?
You're not stopping me now, are you?
I'm afraid so. Coming again, though.
I will.
Yeah. Thanks very much,
Thanks,
James Shugg.